This week, right, the market, a bit, not just this week, wow, the past don't know how many umpteen weeks, the market is kind of like eh, bro, what are you gonna do? All right. So, right at the start tonight, now we are going to discuss this. We are going to take a look at this. The market is kind of, like want to go, don't want to go. It's like, bro, make up your mind. What are you gonna do? All right. So let's discuss this and see what's going on. Just now before I came online, right, I was looking at what is this? Oh, that was my another window. Let me close that. Got too many window running. The computer so lag. I was researching on the US debt. Because this debt issue, right, as you all can see for the US debt, it has just increased lah. So US government debt, although what it flattened, it decreased, but as you can see, it is really, really just 34. Now this is like what, 36.2 million. So it is trillions, right? So looking at this is kind of, like kind of really, really a little bit insane, because if you look at the past 10 years, right, what has happened is that the government debt has just been increasing and increasing at an unprecedented rate. And large part of that government debt increment was due to 2020. And of course, this was during COVID itself. So March, as you can see, March to June, right, a lot of spending, a lot of issuing of new debt. They just print money, and by doing that they just have to get more debt lah. So they are just literally say, okay, I'm going to utilize the budget that I have for, like sometime down the road. There's short term, there's long term. Likely going to take the shorter term one, and then I'm going to just kick the can down the road. And what happens during when this debt is due? There's something that we cannot do, but they can do indefinitely. Like for example, right, if our debt is due for our mortgage, what happen is we just have to pay up lah. We can't say I don't pay up. But for them, what they can say or what they can do is they also pay up, right? They do not want to lead to a default. They just want to issue new debt, so kind of like a refinancing. So it is a little bit like refi lah. So can everyone just have me type REFI in the chat? All right, refi. So that's what they are doing, and they can just print on the debt indefinitely. However, subjected to a debt ceiling. That's the part that is really, as long as in terms of legislation, the debt ceiling is increasing and increasing and increasing, then that's fine. However, if you look at the debt itself, right, currently we are getting into a total public debt as a percent of GDP. So GDP, if you think in terms of income, right? Like your income is income, right? Then your debt is your debt lah. So GDP is like an income. So total public debt as a percentage of GDP, if you are like 40%, meaning that, oh, okay, I earn $100, I owe $40, so I'm healthy. Then of course, as you can see in 1990s, I earn $100, I owe $60. All right, that's still okay. Then 2013 was the tipping point. So this was in 2013, where I earned $100 and now I'm in debt of $100. So how has the market sustained, or how did the US government or the whole economy per se, right? How did it sustain for the past 12 years? It literally went by, I never mind lah. I just increase my credit limit lor. I just sustain lah. I take one debt to borrow another debt to cover another debt, and then you don't have, I just take a new credit card to go and pay off my old credit card, and then and again and again and again and again and again. So the big bump lah was right up at quarter one of 2020, because that was during COVID, and this was really bumping it up. Like a one-way train to currently is 100 and the highest it was is 130%. So no doubt it has been decreased already. That's why you can see from 2020 thereafter, right? Especially like 2022, they increase the interest rate and so on and so forth. They just want to discourage the debt number from just climbing. I think it's okay for the market to really go through like the public debt level should increase lah. Just like prices will get more and more expensive, but it should not be parabolic, because if it's parabolic, then it's not sustainable. Then it will lead to a crash. So same thing with that. They are okay, and they have definitely planned for this increase. Like this increase in the debt level over time, but it's not like over 1 year or 2 years. It's over 1 decade, 2 decades, That's usually how it is. Like you can see 1990s, then the 2000s, then the 2010, then the 2020. So it's kind of getting a little bit atrocious, a little bit out of hand. So as of right now, quarter four of 2024 is standing at about 122. So this means that the debt level is 122% of GDP, which means that they are in debt. So if this continues to grow and grow and grow, then eventually they will hit into what we call a debt ceiling. All right. Again, this is not new. Over the last 10 years, it has hit into debt ceiling like how many times already? So this is not new. And the reason why it's not new is because you think about it, if your income cannot sustain a kind of lifestyle that you want to have, just think about it from a perspective of an individual. If your income cannot sustain the lifestyle that you want to have, and you have been using like one credit card to sustain your lifestyle, and everything just rolling over to the next credit, to the next bill, or to the next bill, you just make the minimum payment, and that's it. Then not enough. Then how? I take a second credit card. Then you roll over. Now you're rolling two credit cards. Then not enough. Then how? You roll over a third credit card. And not enough. Then how? You take a fourth credit card, and so on and so forth. Now they are like on their I don't know. I don't know how many credit cards already. But in terms of human, you'll be like judgmental, right? Who you like that can man? Walao, what the hell, right? In terms of a country, I don't know why. Somehow, when it comes to a country, is somewhat acceptable. So it's it's something that I mean I am scratching my head lah. Like screw this. If this guy, if US is a human, he's a shitman. He's not a human. He's he's in debt. So I think y'all can see the gravity of this lah. All right, and it's really just increasing and it just upticking. So what this leads to, right? What this leads to is the fact that um whenever the percentage is too high and they run into the debt ceiling. So you can see the debt ceiling is a restriction imposed by the Congress on the amount of outstanding national debt that the federal government can have. So time and time again, I know we are literally kicking the can down the road because not we lah, they lah, because they have just gone into impasse, and after that they just even government shut down, even this, even that, and then after that they just decide to okay, this is too much pain. I mean everything shut down, everything come to a standstill. This is too much pain. I vow to bring it down, but time and time again it is just approve, go higher, approve, go higher, approve, go higher. So the debt ceiling is the amount the treasury can borrow to pay its bill and have become due and to pay for future investment. So once the debt ceiling is reached, the federal government cannot increase cannot increase the amount of outstanding debt, losing the ability to pay bills, fund programs and services. So this is literally I don't know, you call this man-made, I will call this is like a kind of man-made, not what they want to. A little bit of engineered towards this way. So this is like I don't know lah. And they have never defaulted on on its application obligation, because if they do, then the cost of borrowing for them, even at a national level, is going to be very very high. Currently, right, like Singapore government, the credit ratings is like AAA rated, right? For US government uh credit rating. So yeah, so now as a long-term foreign currency issuer, is AA plus stable. All right, it's AA plus. It's down from AAA to AA plus. So if they ever go into default, right, then guess what? These AA plus are gonna become like A. So what will happen? That will mean that if they want to issue new debt, it is gonna be more costly and it's gonna sink them. Okay, it's kind of a little bit oxymoronic lah, but it's gonna sink them deeper into deeper shit. So it's like that law. It's like that law. Uh, cool. For Singapore, it's 160% plus. Yes, if you do the breakdown, you it's not external. If you do a breakdown, it's more of internal debt. It's the government that is owing to the citizens, right? Via whatever like the CPF or CMI lah. And in terms of surplus, we have a surplus. We don't. I think our government, safe to say, is more Asian lah, not so ang moh lah. All right. So yes, it is high Singapore one, but you go and dig into it. Singapore one is a very very unique case. You guys go and dig into it. It's a very very unique case. The debt is consisting of certain things. Yeah, just go and Google that, or rather just go and dig deeper lah. So what is happening right for the US lah? The total public debt is getting higher and higher. This is also the reason why. As of late, right? If we are, last year I did mention this. Last year I did talk about recession. Recession is not on the cards yet, but recession is definitely a theme that has been, alive since 2023, and then it was kicked down further. Then 2024, there was nothing, and then that was where in 2024 we have the very very deep inverted yield curve. We have that very very deep inverted yield curve, hence leading to a projection of a recession. They are saying that it's unlikely to sustain. So this year, what happened is the recession, right, is mainly driven by Donald Trump, or the prospect. I wouldn't say like we are heading into recession. I think it's just slow growth. But the prospect of us going into a recession, or US going into recession, Singapore still healthy, Asia still okay one. All right, for now for now. But US recession is likely going to be triggered by tariffs. And this is the part that I find is very, 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 very funny. Like it sounds very cool, right? I think I said this before. Donald Trump is like, oh, I'm gonna slap the tariffs on this company. I'm gonna slap it on this country. So Mexico is gonna pay the tariffs. Or rather, Mexico imports tariffs. Then after that, Canada imports tariffs. Then China reports tariffs. Then you talk as if you're like a national hero. But the actual fact is, who is paying for these tariffs? Who is paying for the tariffs? Is it Americans, or is it really the overseas counterpart? Who is paying for it? Can everyone help me answer this? Americans or the overseas whoever that they slapped the tariff on? It's literally, it wouldn't be both lah, right? Literally, it's Americans. Literally, it's Americans. So why? Because at the end of the day, why should I decrease my selling price so that it makes it attractive? Maybe I will, maybe I won't. But if I'm sitting on a ton of profit margin, then yes, I can reduce it a little bit and contribute a little bit and share, right? But why would I? You don't buy, then don't buy, lor. I mean, simple as that, lah. Unless if it eats into a case that it really not just if your profit margin is, imagine your profit margin is like 20%. Then you say I slap the tariffs 20% on you, then ask you to make it competitive. What do? You do charity, man. Cannot be what. You sure won't accept one what. Then if you sell it as it is to, and chances are you sell it as it is to the businesses, right? The importers from US. And the US, who is charging the tariffs to, or how is the tariffs being charged? It's being charged to the importers. So that's why Americans are paying for it. And think about it. You charge to me, it's okay. I pay first, then I just increase my selling price, and whatever inflationary pressures that there are that's going to face is all going to be triggered by the tariffs itself. So in short, right, this is this kind of retaliation, this kind of policies is why the market has been in a risk off moment for the past 3 months already. The basically quarter 1, it's kind of like a shit, you know, uh the quarter 1 is kind of like a little bit risk off, and right now with the impending the US debt just increasing and increasing, and then the fear of going into a debt ceiling, and then of course the rekindle of this recession, this pink elephant, that's why the market is just reacting in a certain way that it is lah. All right, and no doubt lah, in the trade war everyone suffers lah. It's just like for example, if push come to shove, right? If let's say two individual they argue, and then I decide to beat each other, both guys will get injured. What? So that's the point, lah. And namely, why I'm talking about this is because a lot of the question mark comes, right. Why is there like a 10% drop? Is this drop overdue? What is going to happen? Well, these are all the factors that are contributing to this drop, especially the debt, and there are sayings lah that the US this time round may not like Ray Dalio. So Ray Dalio, he's a billionaire and founder of Bridgewater Associate lah. I think most of you will know them. know him, I mean. So Ray Dalio warns that US face an imminent debt crisis as debt to GDP ratio climbs past 122, with experts worried that foreign buyers will pull back or raise interest payment to make borrowing unsustainable. So when this happens, this goes into a huge pile of shit. Why? Because as my short-term securities or the short-term debt, right, is matured, I need to repay. So when I repay, usually is, oh, credit card 1 or 2, I need to repay. I have credit card 3 and 4 to go and pay 1 and 2. Now, what they are saying is, if this rating keep going over and over and keep going higher and higher, you can't find your credit card 3 and 4. You can't find your credit card five, 5 and 6. Or maybe you need 3, 4, 5, 6 just to pay off 1 and 2, because not many people want to trust you and buy your debt anymore. And China remains one of the biggest holder, as you know, one of the foreign holders lah for US debt. All right, so it's like this is the part that is making everyone like, okay, what is gonna happen, right? What is happening? And this is also why there's a little bit of, like, prudent. There's a little bit of, I better don't anyhow buy kind of thing. That's why the market, right, as a litmus test, the market is not into like a very buying frenzy. The market is more of in a very, risk off movement, and that's what it is lah. So if you look at the T-bond futures, this is the 30 years bond. If you look at the 10 years note, right? This, in fact, this asset class itself, lah, if you're looking at the ETF, this is like 20-year bond, TLT. This one, you can see it's climbing up. And yeah, this is one asset class that is definitely climbing up and has momentum, which is also lead to yields dropping, lah. So when you drop, that's basically the whole effect that they want. Why? Because sometime in June, all right, sometime in June, a lot of all the short-term maturities is going to happen. And if I'm going to reissue the debt at higher and higher interest rate, then the interest that I'm going to pay on this debt, right, is going to be accrued to millions of dollars. So that's going to further sink me down into shit lah. So I think what the government or Donald Trump is trying to do here, although he can't say this and he doesn't say it, is, if I can, I make it into a recession. If I can, I crash the market. Then I see what you do lah. So the ball is in your court. I'm gonna crash this, and then I see what you do. By saying you, I see what you do. This you refers to Jerome Powell, because as of yesterday, all right, as of yesterday, um, so as of yesterday, the where is that? Over here. So as of yesterday was the FOMC meeting, right? So Fed Chair Powell said that the central bank forecasts less economic growth, higher inflation in 2025. Somewhat they offset each other, blah blah blah. But the key thing is they kept interest rate in the target range of 4.25 to 4.5%, which is like 4.5 now lah. Policymakers, they still see two rates coming in 2025. So it's not exactly like a good thing. It's just like okay, you're saying back exactly what you're saying, what you were saying. And a good part of the central bank higher inflation expectation comes from the tariffs. So again, who is going to pay for it? Americans. It's not the foreign counterparty. And you're like, you don't buy, lor. I so cheap already, you don't buy somewhere else. So he also noted that while economists outside Federal generates the likelihood of a recession, severe downturn is still unlikely, which is also my point of view. So that's why, stocks surged to the high of day while Jerome Powell speak at the podium. However, looking at this, right, I do think that I have a little bit of reservation. So now, before I move into the key levels, guys, are there any questions? So far, is it clear? Does it make sense already? Like, what's going on in this market, the reason why? Does it make sense? Yes or no? Can you just help me type it in the chat? Can everyone just give me a response in the chat, please?